Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Monday, the 22nd of July. Welcome out, everybody. Hope everybody had a great weekend, a great day here in a fairly uneventful market today. Not a ton of movement. We did see some pretty good movement over in the semiconductors. Most of the semis up pretty good here today. Market-wide, broadly speaking, it was just kind of a dull day going into a big week of earnings. And welcome out, Linda. Hey there, Jasari. Great to see you as always. Hope you guys had a fantastic weekend. It's summertime, and it feels every bit of it. Hi, Patricia. Great to see you as well. We're getting right into earnings. It's going to be a big one going into tomorrow. Pretty light tonight, only a handful of S&P 500 companies, Cadence, Whirlpool, to name a couple of them. So, smaller size or mid-size S&P companies, still pretty darn big. But tomorrow before the open is where we really are really going to start feeling earnings. Coca-Cola, United Technologies, Lockheed Martin, Travelers Insurance Companies, KeyCorp, Hasbro, Lamb Weston. So we've got a bunch coming out here tomorrow before the open. Of course, we've got the Amazon and coming up here as well. It's a big week, as you guys all know, on the earnings side of things. So, keep that in mind. For me, that usually means it's going to be pretty mellow of a week. Just kind of let this one go, and we'll pick back up here in a week and a half, at least directionally speaking. And welcome out, Fortino. Great to see you as always, my friend. It was dull. It really was. We kind of a little bit of a pop on the open, but it just was not going to happen. Really a whole lot of nothing, a little back and forth early. Second half of the day, as you can kind of see here, we really just kind of hung out. Hey, Scott, good to see you, my friend. Hope all is well. Hope the market treated you nicely here today. It was just going to be one of those days. And quite honestly, I would love that to be the case this week with so many earnings. That wouldn't break my heart any, but we'll see if that's what we get. We are holding that 20-day moving average, that little now 2-day floor that we've kind of put in, or I guess we're going on 3 days now on the intraday. So we are kind of holding that support zone on the shorter term time frames. Still just not quite ready, really, it looks like, for traders to say, yeah, we're interested in this pullback, or no, this is going to have a little bit of a deeper retracement. We're just continuing to hold that support level. Certainly worth keeping an eye on. The longer we hold it, the more important it's going to be, to me at least. Of course, 2950 or approximately 2950 on the S&P is still the primary support level, I think, to be looking at. Same story over in the Dow. Doji, we are holding up a little higher, I guess. Maybe better is not the right word, but still closing above that 9 EMA on the Dow Jones. But again, very similar price action. This is so often the case. We're just, who wants to be the first one in, right? So the first ones in, they jumped in early on Friday, right? And so that wave is gone. Now you have a little more conservative money out there, kind of, well, let's see how, let's let somebody else get in first. And that's really what it kind of feels like to me, at least as this week kicks off. Over in the NASDAQ, a little stronger movement. It was largely, most tech had a pretty darn good day here today. A big part of it was the semiconductors. They've definitely, after that break of that resistance levels, gosh, that was a month ago. It does not seem like it was that long ago. The retest on that retracement, we've seen a lot of strength, throughout the semiconductors. Obviously, there's more than semiconductors in the NASDAQ, and it certainly was a pretty good day over there, but really showing some nice strength in the semiconductors. For what it's worth, and I don't know if it's worth anything or if it's not, the semiconductor ETF is working into some resistance. We got a little bit of room, but we do have some resistance on the actual ETF that does track the semiconductor industry. So that'll be worth keeping an eye on as we're moving forward. We've got some earnings coming up in the next week and a half or so in some of these guys. AMD, just kind of jumps to the top of my head. And welcome out, Emily. Great to see you. And hello there, Marie. Always a pleasure to have you with us. Hope that Theta Queen is doing well. Over in the rut, speaking of theta, a little more downward drift, but hanging within this shorter term range, within this longer term range. We have kind of given out of that little floor, and we've seen our moving averages kind of turn, or at least our short-term moving averages, a little bit maybe of a bearish signal in the very short term, with that 9, falling below the 9, and now that 9 crossing below the 20, maybe something to keep an eye on from a very short-term perspective. But really, for me, you guys know where I'm at. Same as always, it's still in a trading range as far as I'm concerned. Looks like the bears have the very short-term sentiment on it as of right now, but really that's about as far as I would be willing to go, still within that approximately 15 to 16 range. And of course, right before I got ready to hop on here today, I hit the symbol organized alphabetically, and I did a very fast and not particularly great job of reorganizing my list the way I like it. So I might have to bump around a little bit here today. Over in materials, it was much like the market in the sense that we really didn't see a lot of movement. Broadly speaking, the movement that we did see, though, was a little bit more skewed to the downside. Now, as you can kind of see on the ETF here, we have put in a little bit of a short-term floor on that 15-minute time frame. Still need to take out this resistance at about 58.40 before we can start getting too excited on the very short term. But really, for me, it's bullish with a slice of neutral right now, as long as we're holding above this support zone at approximately 57. Not a whole lot to say on that side of things. Taking a quick peek at some of the names in here, we're still seeing kind of that consolidation on Lin, on ECL, kind of hanging right below that resistance level. So not a whole lot change. PPG still kind of hanging right below that resistance level. We did see some nice movement on Newmont as silver continues to stay strong, kind of following through on that breakout from that little consolidation period. The charts really are looking similar. One that certainly got my attention, but it's probably now for next week, which is fine, is a Dow. We've talked about this one on Friday, I believe. A Dow break on this W pattern. Just going to have to be patient, see if we can get that. We'll have to see. Right now, we are selling at resistance, right? Resistance is not easy to break, even though sometimes we kind of think it might be. So really just more of the same. And that really is going to be the theme here on a day like this, where it is just a little bit more of the same. I guess we'll try it this way. We'll go alphabetical, see how that feels. When we look at the XLC ETF, I think you have to be really excited about it technically. A little bit of a hammer candlestick at the old resistance level. Short-term moving averages have given out. I don't love that, but price-wise, makes a lot of sense to buyers to step in there. And then you realize that you're looking at XLC, and you've got Facebook with earnings, and you think that support level is going to matter to Facebook earnings. Maybe it will. I certainly don't believe that. This is a big week in this sector. Probably, in my opinion at least, it's best to let this one overall kind of play out here today. We did see some pretty good selling over in Verizon and AT&T today, both of them looking pretty darn red. Netflix following through on the follow-through of that gap down on earnings. So there are certainly some bearish things. EA had a little bit of a bounce back day, but certainly nothing, at least in my opinion, to change it from a technical point of view. You did see Dish have some nice upward movement here, so it's not all terrible, but the big names have earnings, a little bit mixed action on the charts. I think we need to be careful this week with XLC. I know many of you probably feel the same way that I do about it, with it being so heavily weighted. It's something that you don't really love to trade, but many of you may not feel that way, and certainly doesn't mean I'm right. It just means I'm not comfortable trading it. So certainly Google, Facebook this week, definitely going to want to keep an eye on those earnings, whether we are trading the ETF or not, right? But do keep in mind that can have a big impact. On energy, it is still, kind of pushing up into these moving averages. I still don't have a great read. I still have it sideways. For me, the bearish signal will be the break of this low from last week. If that support gives out, then I think we can talk about some bearish opportunities, broadly speaking, in energy. On the other end of it, the break above, I'm going to call it the 200, because it's really going to line up with these tops realistically by the time, if we break that way. Anything in between here, I continue to keep it neutral. Not a whole lot of new things to say. We did have Halliburton report. fairly mixed earnings, maybe a little more positive than negative. I think they beat on earnings and missed on revenue by a bit. Had some decent price action into some resistance here. I don't know if there's much to see on the Halliburton front. It continues to be an area that very unclear, at least in my opinion, as of right now. I'm going to continue to tread lightly, look more from a neutral perspective, at least until we break. I do believe that little fake, well, I don't know if we even call it a fake. We broke it on the intraday and closed, caught the close, rallied on the close. But that price action below that support level, I do think it gave us, some nice information if that breaks as far as where to look to the bearish side of things. I believe you could make it a little bit of an argument that this is a bearish retracement. Hey, we did give out on support. We did, right? We didn't close it, but we gave out on support, working into some moving averages, some downward movement. You could argue that that is a retracement, but I think with just the way it's behaved as of late, I think erring on the side of caution is the right way to be approaching the energy sector. Still, one of these days that won't be true. One of these days we'll get a really nice signal, but it doesn't appear to be today for me. Over in the financials, we do have some earnings coming up this week. We do have quite a few of them behind us. We're some nice consolidation patterns on some of the banks. Citigroup consolidating up top, Goldman Sachs consolidating up top. Maybe not as pretty, but we are consolidating up there. We looked at Citigroup. We didn't look at Bank of America. Where are you, Bank of America? There you are. Bank of America knocking right on the door. So we do have some of these consolidation breakout type of patterns on many of the banks. We do have, as we kind of talked last week, Travelers kicking us off here tomorrow, some bigger name insurance companies reporting this week. So from that perspective, we need one more week to really get through. A lot of the more regional type of banks are reporting this week too. Next week, we'll kind of, for the most part, be through the earnings on the financial sector. There will still be, of course, some stragglers, because there always are, but we're getting close. We're over the hill now and on the way down to the other side. I like the way that the banks are kind of setting up personally, at least on these nice consolidation breakout patterns. Whichever one I may or may not trade, them breaking out together helps one another, right? It's on the same team, so to speak. So I will continue to keep an eye out from that perspective. Overall, on the ETF level, it's going to drive me crazy till I get this organized the way it was supposed to be, in my head, the way it's supposed to be organized. On the ETF, a little bit of a bounce back day. Probably want to see, if nothing else, I want to see on this type of a pattern when you have those pullbacks and then people get excited and it fails. At least in the very short term, I always want to kind of reclaim the failure point, if that makes sense. So that would be the high from Friday for that signal, broadly speaking. But lots of insurance with earnings that might have an impact on the way that this ETF performs this week. Over in industrials, a little bit of a back and forth day. Again, we've got some big names in here, including Boeing this week coming out in the industrial. Going to have to be, again, it's earnings season, and like it or not, you're going to have to be careful on your directional trades, and they're certainly going to be less than you're normally used to. Boeing knocking on resistance going into some earnings. Yeah, it should be interesting. I don't have any interest in it. 3M, I love this 3M pattern. I love a break. And hey, Amy, good to see you, my friend. I love a break of that. I really like created that higher low. I think it's more clear when we look at it on a weekly time frame than the daily. But earnings this week, we're going to have to get through them, and they might completely, well, hey, things were going great last quarter at this time, right? Then earnings happened. So earnings can certainly have an impact on anybody, certainly on 3M. We'll have to get through earnings. I'm keeping a close eye. If we can kind of not see a huge movement, I think this pattern is shaping up nicely. Earnings are going to be in the way. We did have KSU as we see a little bit of a bounce back in our railroads, knocking on the door of a break, as you guys know, or at least many of you do who have been around here a little bit. We saw them break last earnings. We have them knocking on the door of a breakout here today as well. Pretty decent spike of volume since our, since they kind of were drugged down with CVX when the CVX had their or CVS, I'm sorry, when they had their earnings, they kind of drug everything down with it. We've really seen some nice volume coming back into KSU in particular. Hey, that was a sweet deal, I guess, in hindsight. So keeping an eye on that one at resistance for sure. And we have some time on the earnings front with these guys, of course, just reported. United Technologies, we've got them coming up tomorrow morning. So, it could be an interesting reversal pattern, but earnings in the way, earnings in the way. Lockheed, another one, pulling back into the 50-day moving average. Earnings tomorrow. Goodness gracious, I can't wait till I don't have to say that all the time anymore. But we've got another 2 weeks of that. On the actual ETF, again, we're going to have to be careful with all of these ETFs. We can look at their signals, but we do have to keep in mind with so many earnings coming up, it can really beat up technicals. As Coach Mark says, the volatility is the natural enemy of technical analysis. It does get in our way. If we can kind of reclaim, these little 2-day highs, I would expect a little bit of price appreciation, honestly, on the ETF, but big names, right? Big names coming up in the industrial sector on the earnings front. Good solid day on in technology, and we looked at the semiconductors, and that was certainly a good day for the semis. AT, great mover. Micron, after breaking out late last week, moving strong. We still have Nvidia knocking on the door, not quite breaking out just yet, but knocking on the door of a potential breakout. AMD, of course, earnings, I believe they're early next week or mid next week. So interesting things going on over there. But, it was other areas too. It wasn't just our semiconductors. Microsoft, nice little inside candle. Post earnings, always nice to see. Apple, a little bit of a breakout leading into earnings next week. That's a really nice little technical signal, I think, in the very short term. I'll just kind of try to straighten that out and probably fail. But again, earnings next week, going to have to be careful. Intel continuing to recover after its debacle. Cisco working right into, just shy of those highs. I still like this as a break above those highs for confirmation of this breakout. We don't have a lot of time left. So Cisco, if you want to do it, you probably need to get doing it before too terribly long. Oracle stabilizing a little bit on the pullback front. Probably, for me at least, need to see it kind of reclaim these averages, reclaim this high from Friday before we can start talking, but certainly something I think is worth keeping an eye on. At least PayPal, of course, has earnings this week. So as you can kind of see, tech continues to show quite a bit of relative strength in currently, at least. Have to like where it is at right now. On the actual ETF, other than Friday's high, this is it, right? So a lot of, strong trends above the 9, all of that fun stuff. Things are looking pretty nice over in technology to my eyes. A little bit more of a pullback going on in the staples. We're taking a peek at some of these guys. Maybe you could argue we're seeing a little bit more weakness than we are accustomed to in this. Pepsi, of course, breaking down on breaking the support level on Friday. Boy, taking out today's low, probably not a good look in the short term for the bulls. That certainly has the look of at least a short-term bearish signal, especially if we get any follow through. CL, hanging by a thread at its 50-day moving average. We did see some selling over in the tobacco stocks. MO not doing all that great. Philip Morris, of course, interesting place. After breaking out on earnings last week, kind of stopped right at, look at this, this is crazy. It just, I don't know what we do with it necessarily, but after, basically flatlined right at that old breakout point all day long here today. Obviously, I don't think you ever want to buy off of a candle that looks like this, but price-wise, it makes a lot of sense. So it's, it's more selling, more weakness in certain areas, pretty deep pullback here on Walmart. Again, are we going to get crazy and say that's bearish? I wouldn't, but certainly more selling than Walmart's seen in a while. Coca-Cola, well, who cares? It's got earnings tomorrow, so whatever its chart looks like, we'll talk about that post-earnings, right? But you can kind of see a little more sideways, it's a little bit of weakness. I think you have to call, Pepsi breaking support, at least a little bit of weakness, a little more weakness in this than we've seen as of late. Now, I don't think it's clearly enough to say, yeah, it's turning in anything other than maybe the very short term, but I do think it's worth keeping an eye on as we're moving forward into the rest of this week on the ETF. Now, again, we're not really seeing sell signals. We're just seeing weakness relative to some of the things. This has been such a strong area all year long, right? So, any failure is bad, I guess. It's easy to point out your flaws, staple sector, when you've done nothing but good things all year long. On the ETF, keep an eye on that 20. It's going to line up pretty nicely with that old resistance level. If we can start to see a little bit of slowing momentum, some upward movement, some of these things, again, their trends are still intact for the most part, maybe Pepsi notwithstanding. I'm sure there's some out there that aren't lighting the world on fire, of course, but that might present a pullback opportunity, but we're a couple days away from that if that is what we're going to get. Much like the staples, just a little more weakness in the REITs than we have been accustomed to as of late. Worth taking a peek at some of these guys as well. I think some of the bigger names, whereas we're seeing, more sideways than breaks of support, at least in the bigger names in the staples. And we're seeing some ugly signs. Again, we're bearish. No, I don't think you can say bearish. We haven't broke support, but now all of a sudden had a rally. We're now fallen below the 50 on AMAT. SPG continues. Boy, they have taken a beating. They've been struggling all year, while the sector's been strong. When the sector's been showing some weakness, they have really, really taken a beating. CCI missed on some earnings, or at least traders didn't like it. I don't know exactly what its earnings were, but kind of holding its own. Even Prologis kind of a little bit of, that higher low or that lower high. That's just not a great look on these things. It's just showing. I don't want to say weakness, and I don't want to sound bearish, because I'm not bearish. I don't think the sector has done anything to say we should be bearish, but I do think that we're seeing a little bit of signs of weakening within real estate and within staples. To be quite honest with you, trends are not looking as strong as they were even just a couple of weeks ago. And maybe it doesn't matter. Maybe we just want to, I'm going to err on the side of caution, as you guys know, but I think we're keeping an eye on until we break support. I don't think we're really worried. I don't think we shift sentiment, but I do think, kind of like we talked last week, kind of like we've been talking with utilities, I do think we pull back a little bit on how bullish that we are viewing these more defensive sectors, at least until we start to see some price action work back into them. And that might happen as early as tomorrow, right? Certainly, again, we haven't broke support. The trends are still there, broadly speaking, so don't want to sound like a doomsdayer or anything like that, but we're kind of stuck a little bit, if nothing else, kind of stuck in a little bit of a range. More selling in the utility sector here today, as it's just having a hard time breaking through that resistance level. Unlike the areas that we were, the staples and the real estate that we were looking at, I don't see the same kind of weakening of trends, broadly speaking, on these companies. Now you got Duke, and I don't know why I even look at Duke anymore. They've been sideways for a long time, but knee, long uptrend, nothing really to complain about on that side of things. You have SO pulling back a little bit to its 50-day moving average. Lining up with a break would be really interesting until you realize there's earnings next week. AEP, certainly holding up. Breakout candidate, I would argue. SRE, very similar situations. When I look at the utilities versus the other defensive areas, I just feel like their charts are holding up a little better right now. Now, with all of that said, I still think the signal we're looking for new entries is the break on that ETF. That has proven to be an area that's just causing us trouble. And if it's causing us trouble, I think we just assume it's going to be tough to break until it isn't any longer. If we dip a little bit more, slow down a little bit here, coming off of that 50, maybe there's something to talk about on the retracement side of things with the price action, last time we kind of had that hammery type of candle off the 50, it really went crazy. Of course, last time we didn't have as much history at that resistance level. Should be an interesting one. As long as 59 holds, I'm holding on the utility sector, still looking for the break, but maybe, just maybe, if we can get some slowing momentum into later part of the week, maybe there could be some pullback opportunities within this area. I'll be looking towards the breakout candidates. Shocker, I know, within the utility sector. And good afternoon, Jimbo. Good to see you, buddy. A little more selling over in healthcare, just continues to be a little weak. Of course, Johnson & Johnson, the big one, breaking down even further here today. Just a ton of weakness going on over there. It's not all bearish. Again, this is an area that I think we do want to continue to be cautious on as we're moving forward. We looked at Merck, not much time till earnings, but pushed down off of that resistance. We're seeing Abbott, on the other hand, continuing to hold up pretty nicely. Right, CVS continuing to pull back, getting stuck right back in that old trading range. Nice try, CVS. It was a valiant effort, but right back in that trading range. Not a very clear read right now. At least I don't have a very clear read right now overall in the healthcare sector. It is a pretty darn choppy chart as you kind of look at it. Is this a break of support? Well, even if it is, I would argue we've got a lot of support just $1 away. So maybe if this, we see more selling tomorrow, maybe expecting us to fill into that 91 area would make sense. I think you could make a case there. A little upward movement, maybe it's a support bounce. It's definitely got that neutrally vibe type of feel to it right now. It has kind of slowed down a little bit from the divergence that we were seeing in the Humanas and UNHs of the world, a couple weeks ago, but I'm not quite ready to trust it 100%, call it a bull or a bear. I think it can be an opportunity on both sides in a case-by-case basis as we're moving forward. Now, over in the discretionaries, last but certainly not least, probably the prettiest looking pullback of the bunch, to my eyes at least, within the sectors. Gotta like the way we're pulling back here in this sector right now. It's still pulling back on Home Depot. No slowing momentum, no turnaround candle yet, but how do you not get excited about a pullback on a Home Depot? Could be one of those that 2 or 3 days from now, we're having a much different conversation. Need to reclaim right now. We are very bearish, right? And that's kind of the nature of the pullback. We've got a short-term downtrend that's very clearly the bears are in control within that longer-term uptrend on that longer-term time frame. So we kind of need to turn that intraday frown upside down. But certainly, I think we're keeping an eye out for McDonald's earnings this week. So whatever, unfortunately, I'm looking forward to seeing what they do. Pull back on Nike. I much prefer Home Depot, but very similar type of a pattern. Of course, Amazon earnings this week. Not they're not a small company out of nowhere, right? Lowe's a little more of a pullback than Home Depot had, but a little more of a turnaround candle today. I wouldn't go so far as say it is necessarily a strong signal, but relative to Home Depot, a little more indecision on the price action today. I think this is definitely a place. And hey, Whitney, good to see you, my friend, to be open to some of these pullbacks. Again, is it tomorrow? I guess if you're aggressive, upward movement could be enough for tomorrow. For me, I think we need to see that green candle, that close. Let's get some buyers back in here, and then let's talk. I think this is probably the most exciting pullback area, whereas a lot of the tech are kind of looking more breakout-y type style. Pullback style appears to be more in the discretionary, at least in my mind, at this point in time. All right, let's see here. There we go. And I was telling Whitney and Jimbo, I accidentally hit the sort by symbol, and it completely blows my mind to not have it the order it's supposed to be, because I didn't have time. I was trying to get it as organized as possible before we went live. A little downward movement here on the VIX today. No big deal. Nothing really to see on this side of things. Over on the dollar, just continuing to back and forth, a little sideways within sideways, kind of Russell style, just kind of a sideways range within the bigger sideways range. I maintain that this is a perfectly reasonable place and probably a fun place on the intraday level at this point in time. From the swing level, this is still very sideways and worth keeping away from, at least in my opinion. Natural gas had a nice little bounce back day here today, kind of working into a little bit of short-term challenge, kind of our little upward trend line that we were kind of working with, as well as those short-term moving averages as a little bit of potential resistance catalysts. No turnaround just yet. A break above that, maybe there's a little room to work. I wouldn't buy that personally. I think any bullish talk can't happen until we clear that old breakdown point, which is approximately 250 right now. Certainly that will not change for me. A little bit of a retracement could be in order. I would be open to that, as well as a little bit of a break. Keep an eye on this trend line, as I think, it probably will move fast. So probably nothing to see here. But as we work into that trend line, if we start to see some turnarounds, some dojis or things of that nature, maybe we could call this an entry point if we're looking at it from a bearish point of view. If we break above it, a little harder to sell me, at least in the very short term on the retracement. I would call that a little bit of a bullish signal within a much broader, lots of bearish signals, of course. So I do think these moving averages are going to be an interesting fight as we're moving forward. A little bit of a back and forth day over in crude. Again, this one right now, cash flow makes sense. I think you can make sensible arguments, cash flowing it both bullish and bearish, out of the money in either case. Directionally speaking, you are braver than me, and you probably are, but you're much braver than me if you're trying to trade, from a swing perspective, crude directionally right now. Now, if this 54 gives out, that could be an interesting signal worth talking about directionally speaking, but that's kind of with currently where our price action is. I think that's where maybe the clearest trading opportunity presents itself. If we want to buy into this, there's just a million things. All of the daily moving averages, all sorts of short-term resistance and moving averages. Not that you can't do it, not that it's not the right call. It's just that, boy, that's uncomfortable for me. So I'm going to continue to just watch 54, break below 54, certainly a signal. As of right now, the only bullish signal I would feel comfortable with would be the break of 61, which is an awful long ways away from here. Hopefully something new would develop between here and there. Gold, just a little bit of a doji type of a day, taking a little bit of a breather. Again, gold at this point in time, much like silver, but much more of established track record as of late. Gold continues to be very bullish as long as it makes sense within your rules and your systems. And technically, I'm never going to argue with somebody trading with gold. Clearing back above that 1440, that would certainly be a nice bullish signal, in my opinion, at least. So that's probably the number one thing I'll be watching for over in gold. And lastly, over on silver, nice day. I mean, this continues to be just an absolute rock star. Certainly the place to be in the market right now. We don't have, and again, we don't want to get crazy here, and I do think we should probably just assume 17 might be some resistance from a psychological point of view, if nothing else. But we really don't have a lot of resistance until we get into the mid 17s. There's a lot of upward potential here still in silver if we're looking for it. It's tough to jump into something that's made a run like that. I understand that. So if you're not in, you can do whatever you want, of course, but you can also just wait. Maybe we get a consolidation period, one of those 2-3 days, resistance zones, and then the break above. Always a reasonable way to play these type of momentum plays. Get into a 2 or 3 day, triple top on the intraday level, and then break that as the signal. Good movement. I sure as heck wouldn't want to bet against silver right now. I wouldn't knock anybody for taking profits on silver right now. We are well above moving averages, but boy, it has just got a ton of strength. On the individual stocks level, some interesting things I saw today. Kroger breaking below some support here today. Certainly worth taking a peek at, I thought. Our stock option report, I can't remember. That I always forget whichever one they're at, but some nice downward movement over there. That pullback on big certainly shaping up into maybe an interesting bearish retracement candidate as well. So certainly some interesting bearish candidates out there right now. We looked at KSU, we looked at the banks in general, Bank of America, ADI. knocking on the door of a break as well. I don't think you could say that it's broke out. I wouldn't say that, but knocking on the door. So there's some interesting candidates on both sides. It's just the nature of the earnings season beast is there's just not as much to work with, at least if you put a lot of weight on the earnings announcement like I do. With 150 approximately S&P companies reporting this week, most of them yet to report. There will be 5 of them that have reported when we go to bed tonight. So most of those 150, approximate 150, I should say, are reporting, the rest of the week. It's going to be busy, busy, busy on the earnings side of things. That'll keep things interesting. I've always told people if you're ever going to take a summer vacation, earnings season is a good time to do it. So at least if you're primarily a directional or a cash flow trader, if you're loving trading earnings strategies, in the options market, well, hey, you love earnings season, right? And to each their own. So, ladies and gentlemen, that is going to do the market recap for today. But as always, it is certainly my pleasure. I do appreciate everybody's time. Always great to hang out with you guys live. And of course, thank you to those of you who catch the recording a little later. Certainly appreciate you guys as well. If you are new to the channel, of course, be sure to hit that subscribe button, hit that notification bell. Join us over on Instagram, on Twitter at Tackle Trading. You, of course, can find me at FrankMartin23 on Twitter as well. I've always been more of a volatility build guy, Marie, than that's always been my style is, long straddle 5 weeks before earnings, look for the volatility build. That's always been where I've been drawn to on earnings. But that's what's cool about trading. There's lots of ways to play it. Short strangles have always scared the heck out of me, and I know they shouldn't. But they still do. Again, they don't call me a wimp for nothing. I earned that all the time. So thank you, Whitney, Linda, Patricia. It's certainly my pleasure, you guys. I certainly appreciate hanging out with you guys, talking stock, going through the daily routine. I'll be meeting with our new team members here tonight at Tackle Trading over in the onboarding webinar. So if that is you, I'm looking forward to spend a little bit of time with you here tonight. Of course, you can find that directly over on tackletrading.com. In the shows tab, if you'd like to join me, kind of talk a little bit about all the fun stuff we got going on over at Tackle Trading. Let's see, did I do all the to-do list? I feel like I'm missing out on something. Well, hey, I'll end with this one. If you're not a pro member, we'll certainly invite you to head on over to Tackle Trading. Send Mark an email, team@tackletrading.com. We'll get you hooked up with a free trial. If you already are a pro member, if I can say that, well, you rock. It's awesome, and I hope you guys enjoy it. Certainly appreciate you guys. You guys can have a nice night off. Go enjoy your hot Monday evening. I imagine it's probably summertime where you're at too. So DC, yeah, they're probably going to complain about the weather along with me. Maybe not as loud as me. I'm not a summer person, so I'm ready for it to get fall. All right, ladies and gentlemen, thank you all so much for your time. You guys get out of here. Have a fantastic Monday afternoon. We got a big round of earnings, so if nothing else, it'll keep, we'll see some big movers throughout the course of the week. Up 13%, down 11%. It's just who's it going to be, right? So we'll see some interesting movement this week one way or another. So thanks a lot, guys. Get out of here. Always a pleasure to see you. I will see you same time and channel here tomorrow. Bye, everybody.